At first glance, the 2025 budget probably seemed like a bit of a non-event for the self-employed, right? No big headline tax hikes, nothing to really worry about. Well, what if I told you that buried inside it are the biggest changes to your taxes in a generation? Okay, let's dive into this analysis, which comes straight from the experts at My Tax Accountant. And here's the real kicker. While your tax rates haven't gone up, the actual cost and the sheer amount of work it's going to take to stay on the right side of HMRC are about to go through the roof. The team at My Tax Accountant have done a deep dive on these huge structural changes, and we're going to break down exactly what every UK freelancer, sole trader, and gig worker needs to know right now. So, here's our game plan. We'll start with the big secret everyone missed, we'll look at the new rules coming in, and then, most importantly, we'll finish up with a clear action plan that you can start using today. Right, so what is this big secret? Well, while the Chancellor didn't touch things like income tax or national insurance rates, a massive and almost totally hidden shift is happening in how your tax is actually managed. This isn't about how much tax you pay anymore. It's a complete revolution in how HMRC monitors and collects it. You know, this analogy really hits the nail on the head. For years, your tax return was just a single photo, a snapshot of your business once a year. But starting in 2026, it's more like HMRC is watching a continuous live video feed of your business finances. This changes absolutely everything. So the big question is, why all this and why now? Well, the simple answer is money. The government needs to bring more cash in, but they've promised not to raise the main tax rates. So what do? They go after the tax gap. That's the difference between what's owed and what's actually collected. And their main weapon is a huge, tech-powered compliance crackdown aimed squarely at the self-employed. And this whole new strategy really rests on three main pillars. First, there's making tax digital, which is going to force you into a brand new, constant reporting cycle. Second, there's a data revolution giving HMRC a direct line into your earnings. And third, you can expect a massive crackdown on your expenses. Let's break each of these down. Okay, let's start with the biggest change to your admin, maybe ever. It's called Making Tax Digital for Income Tax Self-Assessment, or MTD-ITSA. This basically gets rid of that one frantic January deadline and replaces it with a never-ending cycle of 4 quarterly updates plus a final report. This isn't just a new day for your diary. It's a total change to how you run your business. So who's in the firing line first? Well, starting in April 2026, if you're earning over £50,000 a year from your business or property, you're in. A year later, in April 2027, that drops to £30,000. The message from HMRC is crystal clear. This is coming for pretty much everyone, and you can bet those thresholds will probably drop again in the future. So, what does this actually look like day to day? Well, imagine you're a freelance graphic designer in London. The days of the shoebox full of receipts, they're over. You'll have to use special software to log every single invoice and expense as it happens. Then, 4 times a year, you have to down tools, stop working for clients, and send a summary to HMRC. Just think about it. That's time you're not earning money, all spent on extra admin. Okay, here is a pro tip that could honestly save you a world of pain. Do not wait until April 2026 to figure this out. Get the software and start using it in 2025. Treat it like a dress rehearsal. It gives you a whole year to learn the ropes and iron out the kinks before the deadlines and the penalties get very, very real. And don't forget the hidden costs, the software subscription itself, plus the value of your time that you're losing. Now, you need to listen really closely to this next point, because this is a trap that so many people are going to fall into. HMRC is talking about a soft landing for the first year. This means you won't get fined if you're late with your quarterly updates. But, and this is a massive but, it does not cover being late with your final end-of-year declaration. And even more importantly, it does not cover being late with your actual tax payment. Penalties for paying your tax late will apply from day one. Okay, on to the second part of this new reality. And seriously, stay with me here, because this is where things get really intense. The new digital reporting rules known as DAC 7 basically give HMRC a direct data feed from platforms like Uber, Etsy, and Airbnb. This changes the entire game. And this timeline shows you just how urgent this is. This isn't something that's coming in the future. It has already happened. The law kicked in back in January 2024. That means by January 2025, those platforms were legally forced to send all of your 2024 earnings data straight to HMRC. Right now, as we speak, HMRC has that data. And in 2026, their computers will start automatically checking it against your tax return. So, does this affect you? Well, look at this number, £1,000. That's the annual trading allowance. If you earn more than this from a side hustle on any digital platform, then you are now a bright, blinking light on HMRC's radar. The days of that extra income flying under the radar, they are officially over. There is literally nowhere to hide.
So, with this crystal clear picture of every penny you've earned, what's HMRC going to do next? It's simple, really. They're going to squeeze your profits by putting your expenses under a microscope like never before. They know what's coming in, so now their focus is going to shift to what you're claiming is going out.
Let's start with one of their favorite targets, your vehicle. Now, here's where so many people trip up. If you use your car for personal journeys, you absolutely cannot claim 100% of the costs. You have to keep a meticulous mileage log to prove the business portion. And remember the golden rule? Driving from your house to your main client's office every day, that's just commuting, and you can't claim for it. And working from home is another big one. Yes, you can claim for a slice of your household bills like heating and electricity, but your calculation has to be logical. You can't just pluck a number out of thin air. A common way is to work it out based on how many rooms you have. If that sounds like too much hassle, you can use HMRC's simple flat rate of £6 a week. It's much safer, but you might be leaving money on the table. Okay, we need to quickly cover a bit of tax jargon to understand another little hit from the 2025 budget. It's called the writing down allowance. Basically, it's how you claim tax relief for a big purchase, like a new van or a fancy laptop, over a few years instead of all at once. And here's that quiet hit I was talking about. From April 2026, the main rate for this allowance is being cut from 18% down to 14%. What does that actually mean for you? Well, it means it's going to take you longer to get the full tax relief when you buy equipment for your business. It's a subtle way of increasing your taxable profits in the short term, and it makes investing in your own business that little bit harder. All right, I know that was a lot to take in, and it all sounds pretty daunting. But look, the whole point of this is not to scare you, it's to prepare you. So let's switch gears and talk about exactly what you need to be doing to get ahead of this. Let's build your action plan. Here it is, your 3 essential steps. Number 1, go digital in 2025. Get your software, get used to it now while the stakes are low. Number 2, do your own DAX 7 audit. Get your earnings reports from every single platform you used in 2024 and check them line by line against your tax return. If anything doesn't match up, you need to fix it now before HMRC does. And number 3, systemize everything. Get an app for your mileage. Scan your receipts the moment you get them. Stop letting it all pile up. Now, it's really important for me to say that everything we've talked about here is for general guidance. It is not official professional advice. Everybody's situation is different, so please don't rely only on this to make your financial decisions. So, all of this leaves us with one final, very important question. This isn't just another little budget tweak. It's a fundamental shift in the entire relationship between the self-employed and the taxman. So, you have to ask yourself, are you really prepared for what's coming? To make sure you are fully prepared and to get professional help that's tailored to your exact situation, we strongly recommend you talk to an expert. The specialists at My Tax Accountant are ready to help you navigate MTD, DAX 7, and everything else. You can call them on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk.